Cheers. Nice to be here for our regular get-together. And we've got some exciting real estate moves to talk about. The market's changing, ever-changing, and the key is know where the puck's going. So,
is it slowing down?
No.
No, it's not slowing
hard
down.
no.
At least here in where we are.
So we just hit number 24 in the entire state, our sleepy little market in Stewart. That's a huge accomplishment. And this month,
what metric? Units?
Income.
Income.
So income is just a direct proportion of sales volume, and so it puts us in a really nice top of office, top of market position, very close to top of state.
Nice.
And so that's here in the Treasure Coast.
Nice.
Not Miami, not Orlando, not those giant markets.
Those markets are insane.
They're insane.
It's mind-blowing.
Now, people can sell a $35 million home down there and outdo us in 1 month, right?
Right.
So the key is slow and steady wins the race.
Mm-hmm. What's your average sale price here in this area?
I want to say average is about just under 400,000.
Really?
That's an affordable number for most people, which brings people here. Now, what you're getting for 400,000 may not be that 5-bedroom home and 4-bedroom home with a pool and this that other people are looking for. And an hour range, what we sell, we closed a $250,000 condo and we closed a $3.85 million home in the same month.
Yeah, same county.
Same county.
Yep.
Same county, same type of marketing, same type of customer service. So we're really big on that because we've had some very, very small ones lead to the very, very large ones. And that's a great example too for our buy sale for the month.
That was the same family.
Same family.
Have you guys been talking to many buyers in the last couple of months, or your phone's ringing? Who are you talking to? What's your buyer pool look like? Young, old, transplants, relocate, like what are you saying?
So the summer does seem to slow down. It is just seasonal for us. Like the families that we're typically working with are going to be traveling. But now that they're back, I've had plenty of conversations with them now that school started.
Yeah.
Just getting back into the buying mindset. They just wanted to, like yourself, you took time off. I mean, you took time off.
On your end, I have an opinion.
Mm-hmm.
But are people still talking about interest rates?
Yeah, I mean, they always are. But it's, I missed out. And they went up, now they're gone back down. Now they're like in the buying pool. They're like, okay, we're getting off the fence because it was low, now it went up, now it's back down.
And these jumps that we're seeing over the last, if you look at the average rate this time in 2025, 2024, they're within like a quarter of a point of each other. It's 6.75, 6.625, 6.8. So it's like these little fluctuations, these micro fluctuations, and the rates have not changed for like 3 years.
Really.
Right.
But they change all day between 6.75 and 6.625.
Yeah.
Or the little costs associated with those rates going up and down, up and down, and up and down. But really, the average, it hasn't changed.
And what their monthly is going to be, because I talked to a lot of buyers about their monthly. It's not like what their rate and what their overall cost is going to be. It's what their monthly budget is going to be.
Yeah.
I think it's like the stages of grief. We missed out on 3%. We missed out on 4%. But now reality is set in. Interest rates aren't coming down. And I'm sorry for people who believe like we're just waiting for interest rates to come back down. They're not coming back down.
Right.
In any period of time that you can say, so that's when we'll buy a home.
In any period of time that you can say it's buying, or the rate isn't coming down at any truly meaningful amount.
I think they've gone past denial. First stage of grief.
Yeah.
I think they're past angry.
Yeah.
I think reality is set in, and it is what it is. And people who have had a chance to even talk to a few older timers in the room, I know that like we bought our first house at 7%. What was the big deal? 18% in the
Flexible about that.
You're right about the stages of grief. I would add a stage which is fatigue.
Fatigue.
Just
Exhausted.
information fatigue. And it's like, I mean, depending on your algorithm and what you look at, you could go on and, oh, it's going to be worse than 2008.
That's right.
It's going to be worse
Right.
than 2008. No, you know what? That influencer just happens to know that that's going to get more clicks than than it's going to kind of be the same as it was the last couple of years. You know, nobody's clicking on that.
We have a
YouTube
client in
video.
Orlando, and I've got them focused on a particular home in the best neighborhood. And I'm like, I don't care if it's got a giant hole in the roof. It's in the best neighborhood. Buy it.
Yeah.
So they're listening to like how and how. So we're using some really cool AI redesign
Yeah.
Mhm.
to say, you know what, coat of paint, 20 grand with a little landscaping, and this is what the new house is going to look
Yeah.
like. And it blows their mind. They're like, that can't be the same house. It's exactly the same house.
Right.
That we can give them a vision, because it's very hard for people to envision a finished project. And I'm
can
like,
also-
and give me 2 weeks, I can do that myself. I can
Right.
paint that. I
Yeah.
can I can landscape that. Give me 2 weeks. I can do it myself.
And maybe not for a coat of paint, but a bit more major work, whether it's a kitchen update or complete renovation, you can get what's called a subject to appraisal.
Yeah.
So you can give an
Wow.
appraiser a list of to be done work, and that appraiser can go out to the house, assess it in its current state, but then when it places its value, it bases it on the work to be done. So you
Mhm.
know if you're over improving, under improving, or like if your money's going to go distance.
Yeah.
We use those a lot in our in rehab loans.
The hard
Rehab
part
loans,
is
okay.
the appraiser is an appraiser, right?
Yeah.
So they have some constraints, like, woo, we can't blow a lot of fantasy in your direction.
Yeah, which is a good thing, I
But
guess.
Yeah.
marketing people say, appraise this home, the AI version of it, just
Yeah.
call it that. The AI, appraise this home in this neighborhood with these dimensions.
Yeah.
And they may be looking at $1 million home that's on the market. Now we say, but here's the listing. Now it's an easy loan. So they may be looking at an $800 to $1 million home that's on the market for under $490.
Yeah.
Right. Yeah.
And people in those situations may, in one particular case we're looking at, they're going to lose 50 grand when they come to the closing table. They bought 4 years ago.
Yeah.
50 grand in 4 years. That's how much the market may have changed. That's over 15%.
I think there's a lot of room in south of us and in the market around here for those flips that
Yep.
those flips that actually can cash flow and you can see a profit on your input. I do think that there's some housing that needs updated that's maybe from early 2000s that hasn't been touched, and
The cool thing is, so we this would be an interesting process to know, because we can give that information to say, here's a recent flip to your appraiser.
Mhm.
And they're going to be like, we can't really justify based on this house. But when it's done, the sale is in the books. We had the same client we had on, I felt very strongly was good for them. They didn't see the vision. $165,000 flip in 3 months.
Yeah, it's crazy. It's crazy. But back to
In
that
Orlando.
subject to appraisal, you get a quote from a contractor, a GC,
Yeah.
and give the quote to the appraiser, and they're pretty spot on. Like, they know what it's going to cost, they know what value you're adding, and then
Yeah.
the value,
Time and material.
and the
yeah.
appraisal really, it really matters, because that's what if you're taking a loan, it's going to be based off of. If your buyer's getting a loan, the bank's not going to lend unless it appraises, so blah, blah, blah. But,
Mhm.
yeah, so I don't even know how we got there, but
Anyway, yeah. Yet we digress.
mhm.
I love that.
I just wanted to touch on the rates, whether they're going down or not. So even though they're at 6, whatever, 8 right now,
Yeah.
6, 7,
Yeah.
you have the opportunity to lower your rate with different, like getting money from a seller, buying it down. Like
Yes.
you have the option. There are options out there. People just don't really know
Oftentimes, so I
how to
had,
get there, how to get to that rate.
yeah, so you got to, interest rates are on a spectrum.
Yeah.
You've got your qualifying rate, which let's
Mhm.
say is 675.
Mhm.
Rates above that come with a credit from the lender. Hey, you're going to take a higher rate. We're going to give you some money up front.
Yeah.
Rates below that come with a cost.
Yes.
So what I do is, if people are interested in a rate buy down, we'll look at the rate sheet and we'll say, all right, 6 1/4 costs $5,000 in fee, and it saves you X amount of dollars a month.
A month.
I'm finding when I have that conversation, 90% of the time, folks are opting to take the higher rate at a lower cost.
Yeah.
And I am agreeing with that thought because they're going to have an opportunity to just refinance that same rate.
Or recast.
Well, that's a different story, but oftentimes these buy downs aren't worth it because unless you're getting it from the seller, it's not coming out of your pocket.
Well, that's the winner chicken dinner.
Winner.
That is.
So I'm a sales guy, and I believe in making sure people come in with a strong long-term plan. There's no real penalty for cashing out early. But I love that lower rate because time moves just like this. Next thing, I mean, we see young couples. Wow, they showed up pregnant. They showed up with their 2-year-old. They showed up with their second or third baby. And it happened in a period of less than 10 years, and they're still in the same home. We know
Right.
We know who. They're still in the same home. And they would be enjoying, I mean, I think that's really the key. Don't move in a year. Don't move, maybe keep 5 years as your plan. But man, that lower rate goes a long way to handling diapers, baby formula, a little vacation, a little day trip.
Yeah, but so does that $7,000. And if it takes you 6, 7, 8 years to recoup the $6,000 that you're putting down to save $150 a month or whatever it is, I disagree. Again, unless the seller's paying for it. Now, if you're getting max seller concessions, often your max seller concessions being the seller's paying for your closing costs. If they're giving you, let's say they're giving you $30,000 in seller concessions, and your closing costs are 20, you have 10 to work with because you can't get more than the cost.
Right.
So if you have that $10,000 to 10 grand extra or whatever over, and you put that toward the rate instead of just losing it and letting the seller keep it, then it's free money. It's a no-brainer.
Yeah.
That's my
just
thought.
Situational.
And we can always do that calculation. It's very simple. It's the cost divided by the monthly savings equals your time to recoup that investment.
Yeah.
So it's just like, return on investment when you're buying a stock. Like how long? So.
Oh, there we go. Beautiful. Thank you.
You mentioned Recast. We were texting about it last week.
Yeah. What is that?
So I don't know if it's something that's going on social media and it's trending, but I didn't hear for the last 12 years of my career, nobody ever brought it up. And now it seems like everybody I work with is asking me if they can recast. And I don't know how they're hearing about it. It's not a secret. I'm not trying to keep it a secret, but it's just funny that all
not a secret anymore.
Right.
Yeah.
It's funny that all these people are asking about it.
So how does that work when you recast your loan? Like, what is all entailed in that?
Yeah. So recasting is when someone closes on a loan, and then sometime after closing, they do a large lump sum payment, so a principal reduction payment, and then their servicer recalculates their monthly mortgage payment based on the new balance. So
so the payment does not stay the same.
Payment goes down.
You made an additional payment to principal, but your payment goes down.
Right. So let's say
that's cool.
At closing, you close on a loan that's amortizing over 30 years at, $500,000 loan. That payment is calculated based on the 500. They can put. So a lot of people that I'm dealing with, they're moving into their new home, buying their new home, and have a house to sell.
Okay.
They're qualifying for the purchase without selling, so they're not worrying about that till after the fact. And they're saying to me, "Hey, Adam, I'm going to put 5% down, minimum down.
Okay.
But once our house sells and we have $200,000, can I put it against my principal balance and recast?
So that 500 becomes 300.
So the payment that's based on 500, without refinancing or doing anything, you just reach out to your servicer and request it. If you do a conventional loan, might be getting in the weeds a little bit here, but if you do a conventional loan, Fannie Mae, Freddie Mac, the servicer is required to say yes.
That's what I wanted to add.
To recast.
So this isn't one of those, oops, great plan, but no, not with this mortgage.
No, it's a conventional rule that those loans can be recast. Now the servicer.
What constitutes a significant payment?
Yeah, I think there's a little bit of wiggle room and variance there. They're not going to do it every time you put, $2,000
Yeah,
extra
I was
in.
going to say
So that is servicer, servicer based, and it's going to be different between every one. I think a rule of thumb would probably be over $10,000.
Oh, okay.
And you have to let the servicer know. You got to call them up. You got to have the talk. They're probably going to charge you a couple $100 recast fee.
Okay.
That's
So you can't just do it on your own through like however you're paying for your mortgage.
Right. If you were to do it on your own, it would just reduce the principal
Yeah.
quicker. It'd be like making an extra payment. It
Wouldn't
wouldn't
change your payment.
change your mortgage payment.
So I think that's great information. Maybe next week when we get together, we should just talk about the transition from summer market, which has been amazingly busy for us, normally a little sleepy, and transitioning to fall market. School just started, so we know that the traffic's back, kids are back at class, but that's a huge transition point because the end of the year sneaks up on people really fast, and then the regret of we should have bought a home, we should have sold last year and taken advantage of the gain and the tax write-off. There are lots of good variables, so maybe let's just talk about that.
Yep.
Next,
And then maybe we'll get into bridge loans as well. Bridge loans is a really hot topic right now. So.
And very, very powerful. You know,
Yeah.
over the years, we've had a lot of clients put a bridge loan together, and man, oh man, does it make things happen.
All
Very
right.
nice.